Hi everyone, I'm Nishi Patel from Northhouse Accounting, and in today's video I wanted to give you a few tips and tricks on how to actually improve your company's credit rating. So a lot of people are aware that they themselves have a credit rating, and a lot of people just go onto Experian or some of the other agencies and they can actually check their own credit rating. But not a lot of business owners are aware that their company actually has one that's independent of them. Reasons they might want good credit in their company is if they're looking to expand and they need to borrow money, if they're relying on credit terms with their suppliers, or if they're looking at doing things like invoice financing, and in those situations it's actually really important to have a good credit rating in your company. And a lot of people every year, they hire an accountant and they get that accountant to submit accounts to Companies House and HMRC, and as long as that's done, they're happy. And what they don't always realise is those accounts don't just go to Companies House and HMRC. A lot of other agencies are actually taking information from those accounts, and in particular credit referencing agencies are a really good example of this. So a lot of agencies will look at company accounts, and one of the key things they'll be looking at is a shareholders funds figure. So 1 year a company might have a certain amount of money left in it after all its profits and dividends and everything is paid out, but the next year it might have a different amount of money left in it after all the dividends and profits and everything is paid out. So what happens is a lot of these credit referencing agencies, they look at various things like the year-on-year movement in terms of the overall value of your business, which you can tell from your accounts. They also look at things like the kind of liabilities you've got in your business, whether you've already got loads of other loans and people you owe money to. They also look at things like your bank account balances at the end of the year and how much money is actually owed to you. So in addition to that, they can also factor in things like how close to your accounts submission deadline you actually submit those accounts, or if they're overdue. Obviously getting accounts in late is not good for your credit rating because it makes your business look unreliable, and there's like various other factors they actually factor in. So what I want to help people understand out of this video is that if having a good credit rating for your business is important to you, then you need to tell your accountant about it at the earliest opportunity. It's no one will ever manipulate your accounts, but there are various course of action and accounting treatments that can be applied to actually improve your company's balance sheet, which in turn will improve your company's credit rating. So if you're thinking about borrowing money through your company in the next couple of years, if you're thinking about getting new suppliers on, you want better deals with them with better credit terms, then start talking to your accountant today about things you can do to actually improve your company's credit rating. If your accountant can't help you, then get in touch with me and I'll talk to you about your options.